So I think the underlying problem is that we've underinvested in a number of real world systems, right? So commodities, especially energy, as well as we've highly diversified our supply chains globally. Basically, we've optimized for efficiency over resilience, and we're kind of getting the call on that setup, right? So we're kind of quickly finding out the world's not quite as peaceful as we thought it was, and that if we underinvest in some of these natural resources, we're going to be short them when the time comes. And so we have these real world constraints, and combined with the fact that we increased our currency supply by quite a bit, we've run into inflationary problems. And the Federal Reserve and other central banks can't print more of those real goods and services, but they can try to curtail demand. And so right now they're doing the best attempt to jawbone demand lower, while trying also to avoid an outright recession. And historically, the Fed's ability to do soft landings is not very high. It's a very kind of low, maybe a couple times they almost did it, but for the most part, it's like an on or off switch. And so right now, I would say we're basically going into a economic deceleration in an otherwise stagflationary environment. And so I think this is a rather defensive. You generally want to be more defensive at this time and focus on things that have real world utility.